Hello, this is Steve Hammer with HFT Alert, and this video will describe a trade setup for August 3rd. We see on the screen here three different program windows. We have the Delineator, the SPY Liquidity Accumulator, and the VXX Market Pressure Accumulator. The Delineator, of course, is what we use to set our trends. The Delineator provides the direction, the magnitude, and the duration of any trend before it happens. The accumulators are used to analyze the tape in a number of different ways to see when institutions are buying into levels or selling into levels. The accumulators by themselves do not generate buy or sell signals. They give us information upon which we can base our sell and buy decisions. So coming in today on August 3rd, we knew from Friday that unless signal weight opened at a very strongly positive level, we were going to see the primary delineator turn down on Monday, which is today. So coming into the day, we knew that after the very first bar that it was going to take about an hour to an hour and a half for the delineator to turn down. So once we know that the delineator is going to turn down, it originates the initial phase of a cycle, what I call the easy money phase. And in that cycle, if the cycle is just turning down and has momentum, which is measured by the degree that the slope is changing on the primary, then that is what tells us how much potential magnitude to expect. Again, it's direction, magnitude, and duration. So what set up our trade? Well, number one, we knew the direction that the delineator was going to move next, which was down. Number two, we had some initial ranges projected, so we used the chevrons on the delineator to define our ranges. So I'll simply draw a horizontal line this way from that one, and we have a gap here, so we can draw a line there, and then we have these other double chevrons down here, and we can draw a line there. So at a minimum, we would have expected 209.53, which is the level of this double chevron up. Below that, we had a large volume at price spike here, and then a null down to actually down to about this level here, which is 208.28. So these are our expectations. So we knew if we were going to try to trade for 50 cents, we'd want to make sure that our initial target was above this level, so we'd be assured of getting that 50-cent target. So again, our expectations, a down cycle on the delineator, which mean that we would see lower lows and lower highs throughout the day on the 30-minute bars. So we open up the day, we look at our SPY Liquidity Accumulator, which is our main directional accumulator. The VXX Market Pressure Accumulator is a very important accumulator that we use. It's inversely correlated to SPY, of course. Well, here's our opening level, and then here is the level that held resistance, so we will draw a line across that way. And then we come to our first bounce, which is here, and we see that we have a consolidation area here and a breakout up and down from that level by expansion bars. So that's our next obvious spot, so we'll draw a line this way. And that sets up our, if I can get that horizontal, there, it's close enough. That sets up our ranges for the day. Now remember, the what happened over here, we don't really see that, so I'll just cover that up. And we'll pretend that we don't see what went on during the day. And we want to look from here down to here as well. So here, let me cover that up so we don't see what's coming up. So we see that during this time frame, and there's no trade yet, we see that the market made simply a high and a low, another high, and tested this low, and we can see that our VXX Market Pressure Accumulator was flat. And if we look to see what time of the day that was 10:30, and at 10:30 is this bar, and we had signal weight of around -700, At the close of that bar, at the close of the prior bar, it was minus 365. So between the two bars, we had an increase in negative signal weight. Then the slope change occurs at 11 o'clock. So let's move to 11 o'clock. And 11 o'clock is right there. So we'll cover up what happens after that. And we can see that the VXX is still staying flat. So if the VXX MP is flat and not trending, then there's really no selling pressure on the market. There's not really any buying pressure on the market. There's virtually no pressure on the market from the perspective of the VXX market pressure accumulator. So everything being equal, price will continue to move in the direction that it's moving until it gets to a resistance level. So we know that our resistance level is this line, because we drew that earlier in the day. So let's move time forward again. And now here is our first test of the high, and we can see that during that time frame we've got the VXX market pressure going down, which means that stock prices, the SPY, would go up. And here we are at that's 11:30. Let's find 11:30 right here, and here is the bar at 11:30, and signal weight there is minus 402, and the change is minus 31 or 32, which is not very strong. It's not weak. If it were in the teens, yes, it would be weak momentum, but as long as the downside momentum on the delineator is still in there, and certainly at minus 30, that's a reasonable number. And so we see price coming up to this prior resistance and the VXX market pressure declining, which is supporting the upside move in price. So let's move time forward about another half hour. And we see that during that time frame, as price was up, right, this point right here is 1136. And 1136 is right here at the high. That as price met the old high for the day, the VXX market pressure extended down. An extension is an exhaustion indication on an accumulator, and what you would typically see occur immediately following extension is the accumulator to move back in the other direction, to reverse, and pull price with it. So what we see here, up here in our accumulator, SPY accumulator, is that all through this rise, the accumulator showed selling. And if we come over here and click the algo only, we can see that the algos were pretty flat during that time frame. If we click dark pool, we can see that during that time frame they were pretty flat as well. So we really didn't see any net buying occur during that time frame. We'll switch back to the full feed. Here was a sell signal. You had the delineator had already turned down, and we know that in the very early stage of a delineator cycle that any counter trend motion in price will resolve back down in the direction of the delineator. And that's our rule. Doesn't happen every single time, of course not. There are exogenous events and other things that occur, and signal weight can change. But in everything else being equal as it was today, that's the normal kind of pattern you see, and you see that often in delineator cycles, where you'll get a cycle down, price will rally back up to resistance and fail, and then set up a great reversal down into the main trend, which is exactly what we had here, and almost precisely the kinds of setups that we want to see. Negative divergence into a rise to a resistance level. That means that we're selling into that level, and with the delineator being down, you would expect that level to fail. So we push at that point. Let's put this back. If we look at our price here, it's 210.25. The actual high here is like 210.40, but this level right here is 210.35. So from 210.25 back to our lows here, which is 88, there's 72, here's 75, would be down into this level right here. So we did have a 50-cent target between this level here and this level here, and price really needed to rise above 210.25 to even create that range potential. If you're trying to trade for 50 cents in a 40-cent range, it's going to be very difficult. If you try to trade for 50 cents in a dollar range, it's going to be a lot easier to get that 50 cents out of a buck than it will out of, in this case, about 65 cents. So our target was just barely there. So we put on a trade here. Short as resistance, showing negative divergence with downside momentum and a primary that had already turned down in our favor. So we got everything, we got all the wind at our back here. So we move time forward, and we see that this is now about 12:19, and we can see a nice rise in the VXXMP, which is very supportive for a short, isn't it? And of course it is. So let's move time back, and we see that price gets to our resistance, our support level, and holds there. It gets down as low as 84 and holds there. And now let's look to see at this time at 12:28 where we were on the delineator. Well, here's 12:30, signal weight's minus 600. So we have even stronger negative signal weight from here to here, which supports your short. So of course, price continues lower. You would have gotten filled at 50 if you were looking to get more, and lowered your stop to some level where it would enable you to trade that way, to try to get more. Whenever I tried to trade for more, I end up with less, so I stick with what I know I can get. So by the time price breaks out here, I'm already gone. So I had my 50 cents, and I don't care where price goes the rest of the day. I've had my 50 cents, and that's all I really want to try to make is 50 cents a day. That's 2.5 points a week. Multiply that times 12, and that's a lot of points for a few minutes at risk. So we'll just look to see what the balance of the day did, and we can see that the VXXMP continued up until this is 1314, so 114. So we go here, we find 114. Well, it's pretty much at the low, isn't it? A nice reversal in the VXXMP sent price back up. Here we see some negative divergence again, some selling into the high. Well, actually, that's not so much negative. They actually started selling right here at 137, and they sold into this last piece. Let's see what the algos were doing. Algos sold all the way through it. They sold through this level. They sold through this level, and they did nothing here, and they sold into the balance of the day. So they were net sellers all day long. What did the dark pools do? Well, here we go. We can see that if we look at the overall liquidity accumulator, let's take off a couple of these trend lines. And all these features you get with your software, by the way. So let's draw a picture of what the overall accumulator looks like. And say about like that. And then we can compare it with the algo. We can see how close it is to the algo, which tells us that most of the volume and the liquidity, that is all the feeds, was algo generated based on executions and orders being placed by algorithmic trading systems. That could be you, by the way. If you put in a contingent order, that's an order used by an algorithmic trading system. And if we switch to dark pools, we can see that they were flat all during the day, and then they bought into the lows. See how they started buying as price was at this level? And the lower price went, the stronger their buying went. See how the slope of the accumulator rises here? That means more volume going into that accumulator, and that's why these lows held. And you see this relationship all the time. And you would say, well, which do you follow? Well, you follow the one that seems to be having the greatest impact on price. And it's not at the time, it's forward of the time. So if you see buying into a low, not at the low, but into the low, that sets up a very powerful piece of information that you can rely upon.